Hi everyone, welcome back to Be Rich. Today I'm going to answer some of the questions you had given me about the Bitcoin gold video, which I had done 4-5 days back, or I think even probably 6-7 days, like a week back, because I did a few videos with Anand after that, and then I did a series which I was talking about the Fed, China, Nvidia, and of course how even being in circle of competence, you can still make mistakes. I hope you did manage to get the name of the company in the last video, and definitely I would do a follow-up video on that and talk about that company in greater detail and that whole sector in India probably next week when I get some time with Anand. That said, let me dive into the questions which you had asked, and I kind of grouped them together because there are a lot of feedback and I love those kinds of feedback and love giving my opinions and my thoughts on it. First one is about the Bitcoin, gold and sound money. Some of the comments were like this: Bitcoin and gold are the sound money we need. Fiat is Ponzi. Which is most valuable commodity? Not oil, not gold. It's a computational power. Bitcoin is all above value in computation. Bitcoin will become the monetary singularity, not second best. And Robert Kiyosaki said even 0.01 Bitcoin will be priceless. I understand where you're coming from, and I understand that. Just want to clarify this. This gold and Bitcoin represent two powerful forms of money. Gold carries 5,000 years of trust, while Bitcoin is digital scarcity and computational strength. Both are scarce, and both are sit outside the government control and the printing press. The future is not this or that. It is about ensuring against the fiat debasement which is happening. That means the currency is losing constantly value thanks to meddling of government and interest rates and global economic forces. So your money is constantly losing value, purchasing power. So to fight against that, we have to find via mediums something which is neutral, and that is the spot where gold and Bitcoin are sitting. And if you're asking me to put my money right now, I put my money on gold. Even if you're thinking about a singularity, it will be gold. And because simple reason, one, it has a 5,000-year history, so it has a proven track record. And two, is the human allurement to gold. As long as human beings look at gold alluringly, I would say gold has its place. So that's my view. I'm agreement that all of us should have different views, which is good. And I love these kinds of diverse views and discussions. A lot of you had this about stablecoin and US dollars. Some of it was like, if Bitcoin goes up, will stable coin market also rise? The other part of the story is the devalue of stablecoin to raise debt. Then stablecoin not clear. If they peg it to USD, aren't they controlling the same monetary system? This is a great point. Stablecoin does not rise the same way Bitcoin will rise. They are pegged to the dollar, which is true. The demand for stablecoin rises as crypto economy grows. So the crypto landscape per se is growing. So stablecoin is a digital currency in that environment. So as that market space grows, the demand for stablecoin will also grow. That is what the idea is. And today, half the US stablecoins are invested in T-bills. So yes, it is ironic that most nations are trying to move away from treasury bills at the dollar. The stable coins are there for the Americans to refinance their debt and bridge between fiat and the crypto world. So it is going to be a crucial piece of the puzzle for them and for that to grow. And the growth of that will happen just because of the whole crypto space growing. So that is the idea behind it. The third one was around dollar, debt and neutral currency debate. So the comment was US does not have equal gold for the dollar, which they printed. Of course, that's what happened with the Nixon shock. 70% of the US treasuries are owned by Americans. Fed is buying its own debt. Dollar is king always. Neutral currency definition itself is contradictory. They cheat the world with paper dollars. Every single country which is making its own currency, you can argue that it's just not the American dollar. Any country which is printing currency can debase their currency, and it happens because the governments have motivations for the entire populace, just not a single set of individuals. So this happens. The dollar is still king, no doubt, and when it comes to cost is where the question is. Will it stay the reserve currency? Well, that all depends on how the Americans are able to retain trust as they are dealing with the different dilemma which I spoke about. Because from the American standpoint, yes, the dollar is a tax on American industry and on American exports, so that is hurting them. So at the same time, they do want to keep the what you call the influence which the reserve currency gives. So this is not going to be solved anytime soon. And remember, Trump's administration is only there for another few years. This is not Russia or China, where he's going to be sitting there for decades to come. Yes, his policies and his fingerprints can have lasting, implications for the world and the Americans, as much as Obama has had. So that's where I leave it, because you can, depending on which part of the aisle you sit on, you can argue how much of Obama's legacy still influences the world and how much doesn't influence. The same kind of debate we'll be having about Trump's legacy probably a decade from now. So keep that in mind. The next is government control and Bitcoin skepticism a lot of you have had. I don't think government will let private coins take over. Satoshi may be a CIA fiction. Bitcoin is a trap for other countries. Well, government loves regulating and regulations, but this doesn't mean, stablecoin is going to be influenced by American regulations because it's pegged to the dollar. So that's not going away anytime soon. And as far as CIA and Satoshi and all that's concerned, it really doesn't matter. It's in the realm of cannot prove it this way or that way. And if those kind of open-ended debates, I don't try to put much time and water in, because I'd be wasting whatever time I do have and intellect I have, having a debate which is not going to garner any answer. And if I do garner an answer, it is not going to have any implication either. So I don't get into conspiracy theories. And next one is about macro history and revolution. You said first time trade units are decentralized. Like this is like revolution. High inflation can cause unrest like Hitler's time and lead to Bitcoin adoption. This happened many times in human history. Yes, revolutions do happen, and all revolution isn't bad. There are revolutions which have been bloodless and warless too in history. So anything which is a change is good. Change is always the way nature works, and this universe works. We're constantly changing and moving. So don't resist it. I'm not saying Bitcoin is the answer, nor am I saying decentralized world is the answer, but exploring everything on the table will lead to debate, and debate will lead to better solutions of our problems. Like I said in the previous video, this world needs more debates and more, cross-pollination of ideas and discussions, more than feeling that we are right and you are wrong. Real life uses of Bitcoin is being questioned. Some of you said, can I buy a gallon of milk with crypto? Can you help me invest in Japanese market? Which platform do I use to buy bonds in India? Yes, buying bonds in India, reach out to me on Instagram and I will try and figure that out for you. And as far as Japanese markets are concerned and American markets are concerned, yes, you can look at investing in Japanese and American equities and American stocks, as long as you're looking at the long term. If you're looking for short-term returns, I would say be careful of what you're doing unless you know clearly what you're doing. But in the long run, you should be fine. And regarding investing in US equity and Japanese equity, reach out to me on Instagram and I'll have you sorted out there too. Yes, Airbus Boeing video topic is pending. I will dive into that sometime this week, hopefully, if I get a time when there's nothing in the news and I have the studio to myself, definitely. And thanks for those of you who do like me talking fast. And I'm sorry for those of you who think I'm talking too fast. I do not know where I should go. Should I slow down my talking or should I speed up my talking? Either way, you guys have it in your control, because on YouTube, fortunately, you can decide the speed at which the video is played back. So you can speed me up or slow me down. And I'm sure you can enjoy it either way. So these are the questions which were there. I just wanted to sign off the week talking about uncertainty and risk, because this is something you should fundamentally understand. What is uncertainty and what is risk? These two words are usually mixed together and you guys get confused. We talk about mitigating risk. Yes, when we talk about mitigating risk, what is the risk? Risk is manageable and it occurs when your future is outcome is not known, but the odds of what is happening, going to happen, is something of happening is known and it's stable. We do not know what will happen, but we know that something will happen and we know how it will happen. So that's like, for example, rolling a dice or tossing a coin. That is a risk. And that can be tamed, that can be understood. Meanwhile, uncertainty is a situation where the future outcome is unknown. It's constantly evolving. We do not know what the mechanism is, and we do not have any idea what will happen or likelihood of anything happening. So there, all this forecasting fails, and we can't predict anything. So this is the reason why we cannot predict the onset of recession, if something will happen or not. We can talk about, yes, it looks like it likely could happen, and then it gets into probability. And we tell these probabilities to ourselves, like the likelihood of something happening, not happening, AI will bubble, will burst, will not burst, and all these things we tell ourselves to comfort ourselves. To the actual truth is that we don't know. I don't know. Is there an AI bubble which is going to burst? I do not know. Will there be a recession? I do not know. So that is fundamentally most important to understand as a value investor, that we do not know. And since we do not know, all options are equally weighted on the table. Yes, from here it can go to a boom, continuing being a boom. From here it can explode into a bubble and we can be all wiped out. Both are true, both can happen. How much will it happen? When will it happen? I do not know. So we have to look at it like that and make our investments with that knowledge. That is why circle of competence is very important, and staying within that realm is very important, and not venturing out. Anyway, I hope I gave you some food for thought, and it was great answering some of these questions you had. I'll definitely put all the other questions from other 4 videos together and try and answer them again sometime this week. Thanks for watching. Be rich. Like I said in the previous video, which was a bit premature to say, have a wonderful week ahead. That was Sunday. Sadhu corrected me saying, sir, that was Saturday. So this is Sunday now. Right, Sadhu? This is Sunday? Yeah. So we'll see you again on Monday evening with something fresh and probably another new attire. Thanks for watching Be Rich today. Good night.